David Tepper is a billionaire investor with a history of bold calls, including the everything rally during the great financial crisis that worked out extremely well. He also most recently called out a bull market in China. I just did a video on that. Before that, however, he made a sizable bet on Nvidia, buying over $400 million worth of Nvidia shares during the first half of 2023. That obviously did extremely well, up a couple of 100%. He, clearly sees the opportunity with AI, how AI is a backbone in this new industrial revolution, and it's being powered by Nvidia's chips. This is powering a revolution in computing, healthcare, transportation, manufacturing, humanoid robots, all in. You're talking about $100 trillion market opportunity, addressable market opportunity powered by Nvidia. So he clearly sees that opportunity, and his bet made Appaloosa, his investment vehicle, somewhere between $500 million and $1 billion in fairly short order. So he clearly understands the thesis, and yet he subsequently cut his bet by over 90%. So what is going on? Doesn't he see the news where Larry Ellison from Oracle and Elon Musk, are begging the founder of Nvidia for more GPUs, saying, hey, you're not taking enough money? Doesn't he see the stories about how Microsoft is, starting long-term partnerships to help restart 3 Mile Island, the nuclear plant? I mean, clearly, if you're restarting nuclear plants, you're going to need to power data centers that are going to be filled with GPUs. Nvidia's, isn't he seeing the story about how Intel and competitors are nowhere near showing the traction that Nvidia has? So, you see all these data points. You look at Nvidia's financials. You see Wall Street expectations continued 100% growth this year, record margins, continued expected profit growth of over 100% this year, another 40% next year. Doesn't he see all this? And why is he cutting his stake? And his direct quote is, it looks great in 24, it looks great in 25. And that's what I just showed you. But I have no idea in 26 and 27. I don't believe my analysts. I don't believe any analysts. I don't trust myself. It's not my preferred vehicle. Now, he would be a buyer of Nvidia at a lower price, he indicated. But at this current price, he's just not seeing it. And maybe he has a point. Let's see Wall Street estimates here for revenue. This is clearly, this is an incredible chart. Look, from doing roughly $20 billion in sales, less than 10 to 20 for years. And now it's like, oh, are you going to be at 200 billion or closer to 300 billion in a few years from now? These are Wall Street expectations. So clearly just an incredible chart. And you can understand why he's getting a little trepidatious here, because if there's any sort of, impact where you're saying, wait a second, this chart, you can't even see it. I'm blocking it a little bit. But if you assume like, hey, in 2027, you actually don't deliver right here, but maybe you're just a little shy of it. Or maybe you're just a little, north of it. Is that going to be enough to actually drive the stock higher? And do you actually have a high degree of conviction that you will meet or exceed these expectations? Because remember, a lot of investing is the psychology of what does other people think around the poker table of investing. And if other folks are going to say, wait a second, you're actually now missing my expectations or only hitting my expectations, then you could have a situation where the stock doesn't do well, because these expectations, this chart arguably is already baked in. And Wall Street's also starting to expect that margins over time could start to revert back, not all the way, but somewhat back to where they were. Now, clearly this does reflect, you went from a regime where they were at, let's say, 20 to at a high of 40% margins. Now you're in this new 50 to 60% margin. So is it possible that maybe you even do better than you expect on sales, but you have some sort of miss on margins, let's say 5 years out? Is that a risk? That's clearly something where he's saying, I just don't know. It's too hard for me to say with confidence that 5 years from now, 4 years from now, that you're still going to be at this 55, 60% operating margin, new area. Could you go back to 40%? And that obviously has a huge impact on the stock. When I run this analysis through AI ticker chat, it largely comes to the same conclusion, which is that, look, you can have fantastic results for the next few years. You can even get to $260 billion in revenue in a bull case by 2029. Still stay at 60% margins for the long term. Still assume a 40 times multiple by 2029. But if you even have all these aspects. Keep in mind, going from $60 billion in revenue to $260 billion in revenue. This is incredible. 60% margins. These are incredible metrics. It's still only penciling out around 70% upside. So that's why I think he calls out, like, look, he owned Nvidia. He still owns a stake in it, but it's no longer his preferred vehicle because the risk reward isn't as compelling. He's not as sure. Yes, there is this AI revolution. It's not as sure to David Tepper that the risk reward is that compelling. And you see that with this type of analysis, AI Predict from AI Ticker Chat. And so I understand this perspective. So where is David Tepper placing his bets? Where does he see, the next $1 billion opportunity, or how is he capitalizing on the AI revolution? First, in full disclosure, this is not financial advice. Also, quick plug, last week, Shaka, a premium member, wrote, and this is a direct quote, "I'm a member of your premium service 2 years running. Always enjoy your takes on stocks and broader market. After joining, I was able to recover part of my loss during the 2022 crash, but the most rewarding aspect of this journey was the sense of stability that I was able to bring about with the help of your services. If you're looking for compelling investment ideas, come check out Unrivaled Investing. My name is Daniel." And so one of his bets, and this is a direct quote, David Tepper goes, "If you're going to meet these power needs for AI, you're going to have to use natural gas." One of those bets is Chesapeake Energy, CHK stock. It's a relatively small position for him, but he's effectively saying, look, you're going to need a lot of energy for these data centers, one of which is natural gas. That's going to be one of the core energy sources. And what are the compelling plays? Personally, I really struggle with commodity plays because I don't like the dynamics of you're selling a commodity versus something like a branded product or, a rinse and repeat type of model. With commodities, you don't get to choose really your destiny. It's about the supply and demand of the underlying market. For me, it's too hard thinking about that, but this is one of his plays. Maybe he owns some natural gas futures as well. He also talked about how it was pretty much ludicrous to expect nuclear to go offline. He thinks you're going to see continued nuclear proliferation in the years ahead. And literally just today, Michigan plant, the Palisades nuclear plant, received financing, a $1.5 billion loan to restart operations. So you're going to be seeing more of this, more nuclear in the years ahead. So this is just an obvious direction based on the energy needs from AI. So those are two of the key points. He didn't really call out an individual nuclear play. He does own Chesapeake. And, I did a prior video on Constellation Energy talking about, them as a utility that's primarily nuclear and their partnership with Microsoft. His third key idea that he did call out was Meta. Most recently, they introduced Orion, which is their augmented reality glasses. I think this is a really interesting play. This is an example of a situation that, in my opinion, could play out over the next few decades. Mark Zuckerberg sees the opportunity, and I've been talking about this with some friends of mine for the better part of this past decade, which is that in the future, you're going to have super smart glasses like, what you saw here with Zuckerberg. And these are prototypes that he's wearing in this picture, which supposedly cost around $10,000, but he's expecting it to be able to sell in the years ahead for just a couple $100. So you could see a dramatic cost improvement, as they work on this. But a lot of people are saying they were blown away by this Orion product. And I think, once again, this is a multi-year obvious trend. Zuckerberg saw how much pressure he got from Apple previously and how they made his life harder as a, advertiser. And I think he's looking to disrupt the next hardware cycle. And he clearly thinks smart AI-powered glasses. These are not smart AI-powered glasses. Excuse me. They're just normal glasses, but I bought from Zenny, on the cheap. But I clearly think AI built into them and being able to watch what you're doing, interact with you, feed smart information, as you're, working, thinking, interacting with friends, have an argument with your wife, you can be like, oh, wait a second. This is exactly what you said. And, you could pull that up because it's going to be constantly recording and you're going to have super intelligence with you in theory. And clearly Meta is working on that. Zuckerberg has talked about his Llama investments. So, and they have they're a strong contender for being a frontier model, at least a frontier open source model. And so I look at that and think, wow, that is very interesting looking at Meta. I previously did a video on Meta. I want to sharpen my pencil a bit on that one to think about it, just because I am a big believer that the history and future of $1,000 smartphone, I just don't see it when most of the value is going to come from AI and the internet connection. And what if you're able to get that with a comfortable screen that easily goes over your eyes? I don't know. We'll see. I suspect that's one of the cases, and that's clearly one of the bets David Tepper has made. I also think that other emerging, trends will play out in the years ahead. For example, just this past week, I talked about a contract research organization. And the reason why I think they will benefit, and this is I'd argue, a structural multi-year, possible multi-decade benefit from AI. It's an indirect play, sort of like how natural gas is an indirect play on AI, which is that as AI makes it easier for you to research new products, you're going to have more and more biotech companies say, hey, I have this revolutionary treatment. It just needs to go through clinical trials. So I think you're going to see all sorts of secondary effects that can benefit directly. There's also a lot of companies that are going to be extremely disrupted. There's going to be a lot of donuts out there, the call center type of business models that are going to be really struggling. But I think this is an industrial revolution. There's going to be companies that strongly benefit, and there's going to be a lot of disruption. And the trick is to find these things that can hopefully ride the wave. If this video has been helpful for you, please make a point of hitting that thumbs up, hit that subscribe button. Thanks so much for watching Unrivaled Investing.